Welcome to Car Wash M&A, the podcast, brought to you by Amplify Car Wash Advisors, the #1 advisors of car wash chains nationwide on mergers and acquisitions and capital advisory services.
Hi, I'm Lenise Barnett, Vice President of Business Development at Amplify Car Wash Advisors, and your host of Car Wash M&A, the podcast. Here, we'll take a deep dive into the current mergers and acquisitions activity of the car wash industry, with the goal of keeping car wash owners informed on where the market is today and where it's going tomorrow, so that you can make informed decisions about your business. We'll help you answer the question, should I sell my car wash now? Or should I enter growth mode and really scale my operation? Each month, I'll speak with industry experts who will share practical advice on how to sell or scale your car wash. While the industry is undoubtedly changing, what remains constant is the need for solid information so you can evaluate where you are and chart the course for the future of your business. Hi, this is Lenise. Thank you guys so much for tuning in today. For episode 10, we are sharing a rebroadcasting of Amplify Car Wash Advisors partner Jeff Pavone's interview on Car Wash, the podcast, brought to you by the International Car Wash Association. Jeff talked with Matt DeWolf, who's the host of that show, and also the editor-in-chief of Car Wash Magazine. This is a great show that was so good. We wanted to include it on our show as well because it just really hit home on a lot of the things that we're talking about as far as the current state of the market, where the future is going for the car wash industry, and addresses some specifics like what's the future for private equity in this space, what's the build versus buy debate for growth. And it's just a great conversation. I really think that you guys will like it. And again, we wanted to share it here with our listeners because it was a good one. If you like more episodes of Car Wash, the podcast with Matt DeWolf, you can subscribe to his channel as well, wherever you like to listen. And I also wanted to let you know that every month, in addition to the episodes that we bring to you on our podcast channel to listen to, we also create an article that accompanies each episode. So about 2 weeks after the episode airs on our show, we create an article that's posted to our news site. So it's at amplifywash.com/news. And there you can see new information or expanded information from the show, from the previous guest. And so that's just something that you can be on the lookout for. Also on that news page of ours on our website, we share other articles that we have participated in on various car wash trade magazines and things like that, and other relevant M&A news in general. So it's a good place to have a resource to find other news. Kudos to Matt. He's such a great host and just an awesome person to know in general. Hope you enjoy this episode. It's actually one of my personal favorites from the year.
Welcome to Car Wash, the podcast, your source for real stories and real business insights from the experts, both in and out of the car wash industry. So put it in neutral, feet off the brakes, and take your hands off the steering wheel. Here is your guide on this journey, Car Wash Magazine Editor-in-Chief, Matt DeWolf.
Hey everybody, welcome to this episode of Car Wash the Podcast. This is the podcast that makes you a better car washer and a slightly better human being. Friends, I am Matt DeWolf. I am Editor-in-Chief of Car Wash Magazine. And as always, I am your host on this adventure. Today, we've got a fun episode for you. We're bringing back a guest who has been with us before. We don't often do that, so this is a special day. We're going to be talking a lot about what's going on in the current M&A landscape here in the industry. Things have been changing. Things have been moving. So to join me and to talk about that and give us a little insight, we've got Jeff Pavone, partner at Amplify Car Wash Advisors and owner of Commercial Plus Group. Jeff, welcome.
Hey, welcome, Matt. Thank you for having me. I think timing is good. I mean, I appreciate you having us on a second time, and I think the current state of the car wash market probably needs an update.
Yeah, I think the last time we spoke. So if you all want more background on Jeff and how he got into this industry, it's a fun story, but we're not going to tell it today. That's in episode 193 of the podcast. It's one of our most listened to episodes. Fun fact for you. or if you're on the website, it's going to be under season 2, episode 68, about growing or not growing. And we were talking a lot then about this concept of our car wash operators in the point then where they needed to be growing or getting out of the business, right? We were kind of trying to see if are there only 2 options. And I think then we were talking like, I don't know, maybe we're in the 2nd inning or the 3rd inning of this thing, and we think we've got a lot of runway left. But since then, things have changed. What are you seeing now, Jeff?
First off, I think, Matt, we can call this car wash M&A 2.0, right? And it really comes down to looking at the, maybe some basic facts still. First off, the car wash as an industry is still one that is has got a lot of consumer demand. I think there's still a lot of white space. I think there's, we still keep building more car washes and people get more car washes. Now, I think the future for building out car washes in general is going to be still a healthy place for the next, few years. But I would tell you from the car wash M&A, there's definitely a resetting of valuations happening in the marketplace, and it's not mild, it's aggressive.
That's really interesting. I think we've all kind of been watching and waiting and thinking this had to happen eventually. So it was really only a matter of time. I wonder, do you think did it come a little faster than we maybe thought? Maybe I'm a little older than you, and I've watched every cycle that we've seen go up. And they don't go down a little, right? Yeah. They tend, when we have market meltdowns, they happen fast, and they happen, and they're faster and bigger. And I mean, everybody would think it'd go down a little. And the fact of the matter is that, interest rates have been going up for the last year. Yeah. And I actually think, the car wash M&A market was slower, to adjust some of the valuations. They were still paying healthy multiples up until recently, right? So, I actually think the market reacted slower than maybe they could have. And we're really, the question really becomes, you got to ask yourself, were the last few years the norm or anomaly that everybody was? We had so much stimulus cash. We had a lot of money in the dry powder in the marketplace, and I think maybe we're getting back to what normal is in valuations. And before, I think we just had this short period of time where everything was exceptional, and pricing was exceptional too. But I think on a go-forward basis, we're just going to be normalizing where I think valuation should be. Well, I want to come back to that because I think that's super important, and there's a lot of things to unpack around that, especially when it comes to what does that mean for some of these groups that have been growing so fast, and what do they need to do now, and what's that all going to look like. But I want to get into you were talking about how there's still some really high deals going on, really great valuations, but maybe not since the last one you all brokered, which in some ways, I got to tell you, it breaks my heart a little bit because I was wearing the sweatshirt, literally wearing the sweatshirt from that wash when I saw the press news or the press release come out, and it's like Zips enters Chicago market with JetBrite acquisition. And for those who are listening and maybe don't know JetBrite was Dave D'Alessandro, longtime industry veteran, one of the most well-known guys around. Does a great job, runs an exceptional facility, gets a great car, has a lot of really smart tips, and he's sold. And so he was one of those guys I never thought was going to sell, but he did. Can we talk about that deal a little bit and just kind of how that maybe came about?
So I've known Dave for a long time. I consider him a close friend, and I have the utmost respect for him, like you do. I mean, I think if you can have an analogy, they're like the Costco car washing. They wash a lot of cars. They probably wash the best car in the country for the price of anybody. Yep. And they were doing a phenomenal job. I think part of the writing on the wall was that the market was going to be changing. You've got competitors. They had they were the big dog in Chicago. You've got some private equity groups that are going to be entering the market, and I think they just felt, one is maybe the timing is pretty good from a valuation standpoint, but they also it took some convincing. They had to have the right partner and the right structure of a deal, and they're in the car wash equipment manufacturing business, and so they're going to put a lot of focus on development of car washes for their current partner, their new partner, and they're also going to be expanding their car wash equipment company. So I think they're, part of it was obviously money. It's got to be the right deal to feel good about it. But I also feel they found the right partner that was going to help them continue on with their car wash equipment company, which is now becoming one of their real loves here.
Well, and yeah, their equipment's super, super cool. Like, I mean, it was kind of like a boutique-y private label almost thing for a while. And you'd go in and you'd look at it, and it was really high-end stuff, which sort of makes sense. That's why he was able to produce such a great car. But I think it's kind of interesting because all of these things that Dave was doing throughout the years, he was never doing it because he planned to sell, right? He was doing it because he was building a great business. He was being smart about how he was kind of protecting territory. He was. I'll tell you what, nobody was going to come in and build on top of a JetBrite because before they did, Dave was going to do it himself. Right? He's like, no, you're not coming in here. I'm going to make sure that I capture all this.
And it's also, and Dave's one of those sellers that at the end of the day, if this deal happened or not happen, he's okay. Right.
Yep.
And it was a very, very emotional deal for Dave and Sam, his partner, because this is, for them, this is their life's work. Right. And even after the deal closed, like there's no celebration. There's no like congratulations for what? It was a very emotional, difficult decision for them. I think ultimately they're going to be, pleased because they've got still a great. They're still in the industry. They're still going to do great things in the industry. So I think they'll be just fine. But this wasn't one of those really easy decisions. Take the money and run. These are, these are guys that love what they do.
Mm-hmm.
And so they're doing it for the right reasons. And there's still a lot of the guys out there that are still in this business today.
So, okay. I got to tell you, I'm still going to wear my JetBrite hooded sweatshirt because it's my favorite one.
That's good.
Which leads me. So this is a completely unrelated question, but it's something I got to know because I've been thinking about it ever since this acquisition happened and how I'm not going to be able to get any more great JetBrite swag from them. So, Jeff, what's your favorite piece of clothing? Like, what's your go-to brand? I got to know.
Oh, Prada.
Prada? What? Really?
I know.
That's your brand, man?
I don't know. Swag. I mean, I do have some of my own car washes. So Driven, I'd have to say, is our brand, and I'd say Driven brand is swag is probably something I would wear. But yeah.
Like the quarter, like you like a good quarter zip, or like are you like a hat kind of guy?
No, hoodie.
Your hoodie, yeah. See? Yeah, you got it. You got it.
Yeah, especially with my head, I'm the first one to know if it rains and the first one when it snows. So a good hoodie comes in handy.
Yeah, for those listening and maybe not watching, Jeff is what some might call follically challenged. So it just happens sometimes. We are all headed that way. Look, you can't keep a head of hair forever. All right, so I want to kind of stay down this path talking about kind of how can operators set themselves up for success, especially in this new kind of landscape, right? So we were talking about JetBrite. Obviously, they did great things for a number of years. They were able to get a really good deal. In today's market, if we're saying that those kinds of kind of really high multiples and those really big deals are maybe slowing down, what am I doing today if I'm an operator to kind of set myself up to still be able to maximize on what's available?
Here's the great news about this, right? They're still buying, right, is a multiple of EBITDA or your profit, call it, right? Focus on your operations, generate more profit. I mean, so, what's getting lost in all this is, let's say the multiples are going, I don't know, from 15 to 12 or 10. Don't buy into the Wall Street Journal 18 times because those deals aren't happening anymore. but I would say generate more profit. And so I find this question a great question, because as we know operators around the country, I've got operators that you can give me an operator A over here, and he can generate $1 million, $1.5 million of profit at a location, and then I got operator B over here, and he can have the same site getting 500,000. And part of it is, what's getting lost in all this is you got a lot of guys that just were building and developing, and they really didn't put together the infrastructure to operate and drive volume. And, when you look at the great car wash companies, my partner, Bill Martin with Metro, or you look at the Cobblestones and the Superstars and some of these other great companies, they all got the same thing in common. They've got an operating infrastructure that drives volume on their sites. And so if you really put your head down, operations could fix a lot of problems. So, but no longer, Matt, could you go in and think you can, you got this situation today where it's costing you significantly more to build a car wash. So let's say, it went from, $4 million to $5 million. Now it's probably closer to $6 million. You've got interest rates that used to be in the 3s, now closer to 6. That's maybe $150,000 a year, just more in debt. So all of a sudden, the marginal guy is never going to make it in this business anymore. The guys that got by are going to be sitting here, they're done. And so what I tell you is the single best way to maximize the value of your company is going to be drive more volume, at your sites. And it's so overlooked by so many groups out there.
Jeff, so something interesting there that I've been kind of thinking about a lot is obviously you want to be profitable, and there's lots of ways to go about that. But I think that what you're talking about in terms of driving volume really gets to what I think people should focus on, which is at the end of the day, you need to drive more revenue, right?
That's right.
You can cut corners and you can become profitable by cutting expenses and kind of really trying to get as lean as possible. But at the end of the day, if you're not really driving revenue, that profitability is not going to matter, because eventually you're going to get so lean that your product doesn't really produce.
Absolutely, man. At the end of the day, what you've got to be looking at, I see, we've seen other operators operate incredibly lean businesses, and they look at their margin and say, we're operating at a 60% profit margin, but they're generating, I don't know, $400,000 or $500,000 of EBITDA. I go, that's because at the end of the day, if you really are looking to drive memberships, what do you need? You need marketing, you need training. And so the smart guys will spend more money on operating costs, but they'll generate more sales and ultimately have a bigger bottom line. But it may not be a bigger margin than the next guy, but it will be a bigger net profit because they're driving more sales. But to do that, you've got to make investment in your operating team, and it's all the great companies, JetBrite included. I got to tell you, they have one thing in common. Every one of them, they care deeply about their team. They invest heavily in those people, and they do care about them. And so on an exit, they care about the culture and where their company's going. So,
okay, there's a couple of things I want to talk about following that. So one of the things, I still want to come back to this pace of reset, because as we're talking about infrastructure and doing things right, I think there's a question there that I want to ask. But before I get into that, I want to talk about, I want to kind of know, you've been in this industry for a very long time, and you've got great relationships. We were talking about how Dave is a very good friend of yours, and you respect him a ton. What's it been like for you, like personally, to be able to kind of play the role that you've been playing as we kind of get into this space, and to help people kind of do some of these deals and to see some of these opportunities that weren't here 15, 20 years ago, even 5 years ago?
Yeah. Great question. I mean, we've represented I think for, just it's a fact that we've done more car wash M&A this year than probably, most guys combined in the space. and a lot of it is relationships. And I would say a good chunk of the deals we've done have come from folks that have been in this business from 20 to 50 years. I mean, we've sold some legacy companies in this business, and the emotional side of holding their hand of these owners has been one of our at least one of our strengths. When Bill Martin and I first got into Amplify, one of our missions was is to protect the interests of the operator. There's nothing we want to force on them. It's not one size fits all. We really try hard to match the right buyer or partner with the operator, because at the end of the day, price is important to these guys. But I got to tell you, culture is an awfully big part of it, and because we sort of have a little better feel today than most on what the end result's going to look like, we really do want to at least advise and help these guys really understand what are they getting into, what's it going to look like on the other side of a transaction, and that's been a big part of what we do. Now some people are building and just selling, and they don't really care. They walk away and sail in the sunset. Right. But I would say, generally speaking, at least the clients that we're dealing with have a deep love of this business. They love what they do. They love their people, and they care deeply about their legacy and what happens to it. So we're pretty careful about at least guiding them through that process.
Yeah, that's got to be a tremendously rewarding thing for you, knowing that these folks that you've built relationships with, you're helping them both build and leave a legacy all at the same time.
For us, it's really gratifying. It's our business's model is built around relationships, and I can tell you that we've done several $1 billion in transactions just in the last couple of years, and a lot of our business is generated from the clients we've already served. And what's interesting is, in the majority of the people that we've done deals with, whoever the acquirer is or the partner is, they end up hiring us to keep working for them. So for us, it's really gratifying. We never want it to be the guys that are sort of a commodity kind of deal where we take a deal, we sell it, we're gone, and like a typical investment bank is going to do a transaction and they're gone. We really wanted to stick with the client all the way through, even post exit, which makes our model a little bit different than most, and it is gratifying. But again, if you look at Bill Martin and his legacy, I don't know of anybody that loves this space more than him. And we as a company, we take that, and it's part of our culture that we care deeply about the outcome of what happens.
I love that. That is really like tried and true core car wash industry. If we're being honest, that's what it's always been all about, right?
It's one of the, it's funny when you talk to a lot of people that come into this industry, even the private equity guys, a lot of other industries they're very protective of their, whatever they do, right? Whatever they do is their secret sauce and this and that. The car wash industry as a whole is one of the most cooperative, friendly groups you'll ever meet at all. And I go, my friends are all car wash guys now. I mean, I work with these guys, I travel with them, I go to games with these guys. They are very sharing, they're very caring. This is a very, very unique industry of people that really do love each other, care about each other, hang out with each other way more than it's crazy. They got, they're hunting turkeys and they're doing this. And I mean, I don't know too many industries that I've ever been associated with that have that close camaraderie the way this space does. And so, but you have to really embrace it and respect it. And, unfortunately over the last few years, because the money's been so big and easy, you get a lot of people that have come into space and don't necessarily respect it. They look at this as fast money and fees and all this kind of stuff. And at least we feel, we're here to at least, we do want to protect the interests of those people that we do care about.
Yeah, absolutely. Absolutely. I want to come back to the question that I promised I would come back to. All right. So we were talking about the Great Reset, right? We're talking about whether that's going to be what's normal, and we're just going to kind of get back into it that way. I'm curious to hear what you've kind of been seeing, because you all are very close to this, right? In terms of the number of groups that you've worked with and the number of transactions you're seeing. I feel like I've been hearing from a lot of folks that have been growing gangbusters. They're saying, I cannot wait for it to slow down a little bit for lots of reasons, but not the least of which is I will finally be able to focus on my infrastructure and be able to make sure that I can run that really profitable and highly efficient process-driven business that I need to. Does that resonate with you? Is that what you're seeing too?
Well, I mean, yeah, by necessity now. I mean, so, maybe we'll just talk about all these headwinds, what's going on.
Let's do that.
And so let's start with what's happening here. First off, you've got high inflation, which has driven cost up between labor and chemistry and utilities and everything else. It's definitely put some stress on operating margins. So they've got to operate smarter, right?
Yeah.
So that's a necessity. You got 60% cost of debt up. And so when you look at the guys, the consolidators that have bought into the space that have hundreds of millions of dollars of debt, well, their credit facility was done based on certain covenants.
Yeah.
And all of a sudden, when you start adding in these increased interest rates, they're under a tremendous amount of pressure from the credit markets to tighten up.
Yeah.
And so, one of the biggest, concerns that's going to drive all of this, like the credit markets are getting incredibly difficult and tighter. Before it was easy money, and there was a lot of forgiveness or looking the other way and just lending with a blank check kind of mentality. Today, I got to tell you, that's gone.
Yeah.
And so that's going to drive a lot of how these guys make decisions. Today, it's going to be, they've got covenants. These got banks are going to be much more conservative on what they do. And so the news for some of the platforms that got out early and borrowed a lot of money, they're going to have to focus on and quickly getting their numbers in line. And they may, and we're hearing from most groups today, they're all about greenfield. They're all about building new car washes. Why? Because they got to drive that multiple down. If they started up at call it at a 15 multiple, and now you look at Mr. trading at below 9.
Yeah.
So Mr.'s in the 10 range of EBITDA.
Yeah.
And all of a sudden, that rosy kind of exit strategy that everybody was looking at is gone. So these guys got to now drive that. They got to drive that multiple. The platform's got to drive their multiple down, and they're going to do it through building car washes. They can build at a 6 instead of buying at a 12 or 15.
Yeah.
You're going to see a major shift in that environment. So I think you're going to see focus on operations. You're going to see focus on greenfields from a lot of groups. Now, the groups that got in recently, and they're still, the good news. Here's the really good news, Matt. There's a lot of dry powder still out there, and the appetite for car washes is still big. And so I think you're going to find that the buyers are still going to be looking at buying into this market, but they're going to be buying in this probably at a much more, call it a normal pricing, market, instead of these, kind of inflated valuations, and they're going to come in and buy right. And so we're going to see deals still happening, but I think it's going to be at a number, I think it's going to could be 25% or less or more lower than it might have been a year ago or 6 months ago, because it just has to be. The other, piece of it is you got retail sales with a looming recession coming. And so you're already seeing evidence of retail sales on a car wash of being hit. Is that 5%, 10%? But as credit got to underwrite this stuff, again, before everything was bullish, they looked up. Today they're going the other direction. They're going to look at the cost going up. They're going to look at retail sales potentially being hurt a little bit, a little softer. And so you've got to make the numbers work.
Well, yeah, and some people might argue that that kind of normalization and that kind of reset in terms of what people should expect when they enter the car wash industry may give us back some of that essence of the folks who sort of started in this industry, right? Because people are getting into it for the right reasons, not necessarily chasing a quick turn and a quick buck. Now, let's be honest, people who started with car washes back in the day, they were still running a pretty high margin business. They were making money. It's not like this was this was not ever a profitable investment. But there was, obviously there were things like variability of weather. There was a lot more labor back in the day. Now a lot of that is being solved for with unlimiteds and the whole express model explosion. But I want to shift gears into what you were talking about with the recession, right? So we're talking about greenfield. And folks, some of these platforms deciding that maybe I shouldn't buy the washes because they're way too expensive to do that. I got to build more of my own washes because it's cheaper and it makes more sense. At what point, what do you think can slow that down? Or at what point do they maybe pause on that? Because as you said, we're seeing the headwinds, right? Inflation has been an issue for a while. We're starting to see these signs of maybe a recession looming. When do you think people say, okay, hold on, let's put the brakes on? And then what do you do? What do you do then, right? I feel like we kind of spread everything out all over the place, and it's kind of going to feel a little bit like the housing bubble, right? When it burst and you had these places where you just had houses that just didn't get finished. And I hope that's not the case.
Yeah, I don't see that being the case at all. We're still seeing, it's interesting, I met with a group today that has a fairly large portfolio of car washes, and their numbers were down fairly significantly. And I said to them, I go, drive your competition. Because there's, here's the reality is you got a lot of guys building car washes, you got a lot more car washes, right?
Yeah,
so all of a sudden you got more competition. And I go, drive your competition and tell me you're a customer. Where would you go? And the answer was not their own car washes, because out of let's say 3 competitors, they would be at the bottom. And I go, you better start with your customer experience. At the end of the day, number one reason, where does somebody wash their car? It's convenience, right? So the second thing is, if you got 2 guys that are convenient, they're going to go to the better car wash.
Yeah.
And so I look at this as being one of those really great opportunities for great operators with great locations. They're going to thrive.
Yep.
At the end, the recession's not going to kill. Washing a car for $20 or $30 a month, unlimited, is still a bargain.
Yeah.
We're not going to see. We'll see a dent. We were not going to see this business getting battered like a lot of other ones. On the other hand, what's going to start being a material effect on operators is going to be. By the way, everybody's building car washes, right? So every major player, you go down the line from Mr. to go, you name every Mammoth, everybody's talking about greenfields and building. Well, at some point, you're going to have a lot of competition with new car washes. The guys that are going to survive are going to be the ones that give the best customer experience, right? Yeah. And I would tell you, so that's where when you look at forget the platforms and the private equity backed platforms, but you look at the owner operator, I don't think Crew Car Wash needs to worry anytime soon. I don't think Metro has to worry anytime soon. We're watching that the great operators in a market, I don't care who it is, they can come into it. Yeah. As long as they continue to serve their customers well, they're going to be just fine. They'll weather the storm, and they'll actually prosper because they'll be able to grow and expand. So I don't think that's a problem. On the other hand, the marginal operators are going to have a real problem unless they figure out how they need to keep their customers from moving on.
Yeah, it's a little bit of a shift from our conversation from last time, where we were talking about you should either be growing or you should be exiting. And maybe the tagline here is that you should either be exiting if you're not doing very well and you're not willing to put in the work, or you should be really hyper focused on making your wash operations the best they can possibly be with the renewed focus on customer. Yeah, renewed focus on customers.
Driving memberships. If you've got, at the end of the day, some of these businesses never focused on memberships. They're going to have problems.
Yeah.
The groups that have 5,000, 6,000, 7,000 members at a location, maybe they churn a little bit more. But that goes down to execution on How do you handle the churn of your memberships?
Yeah.
We've got some great data from Retention Express and watching what their ROI is, because you got to pay attention. You can no longer let that customer go into a phone box and not deal with them, because when you got difficult times, customers do have a choice where to spend their money, and unless you're stepping up and really this is time that you've got to make sure that everything you do is your A game.
Yeah.
And so paying attention to those people is critical today, way more critical than it was when money was just flowing.
Yeah, I think that this is all really good news for the professional car wash industry. I mean, the level of wash operations that I've seen in just the last handful of years as I've kind of visited washes is so much greater, so much better, and so much more focused on the end user than it was when I first started doing this in 2007, 2008, right? It is a different ballgame out there. And I love that, because washes today are beautiful and they're customer centric, and they really make people feel good about getting their car washed. And I think we're finally figuring that out. I'm really excited about that.
Yeah, I think that's right. I mean, I think competition will drive, a better customer experience. Right at the end of the day, that's what you need. If you have no competition, you can continue to serve the client any way you want, and they don't know any better today. They know better. Right.
Yeah.
And so, I agree with you. I actually think, a little bit of a reset isn't all bad. It does slow down the fury of the pace of, I got to do something now, anxiety. But I do think that everybody out there should just, they're going to have to realize that if they're in this business today, they're going to be in it for the long haul. If they do decide they want to exit, the good news is there's still good valuations being paid.
Yeah.
Right. For good companies. So there's still buyers out there. So the buyers haven't gone away here. I'm getting calls on a weekly basis from groups that want to get in and buy car washes. So we're still finding a lot of buyers. They're just being more, they're being more selective. They're making sure that their diligence is a lot tighter. But they're still buying, and I think good operators will have good exits. But the guys that want to stay in, it goes back to just doing all the things you need to do, making sure you protect your markets by having a good product.
Yeah, absolutely. Well, Jeff, I'm gonna ask you 2 more questions here, and then I'm gonna let you get back to your day. But first things first, I want you to put on your Prada hoodie here and look into your crystal ball and tell me what do you think the future is like? What are we looking at here in the next maybe 12 to 18 months in the industry?
So from everything I'm hearing from most of the big groups out there is we're going to see a lot of car washes being built.
Yeah.
I mean, there's and with the slowing down of the economy, the path to getting retail sites might be a little easier. So I think there's still so much bullish on the industry as a whole. I think we're going to see a lot more car washes being built. The emphasis is going to be on greenfields and development. I think that happens. I do think you're going to see more technologies and improvements in operations.
Mm-hmm.
I still think there's a long way to go to really driving efficiencies and knowing who your customers are. You'll see some AI and some other technologies coming into the car wash so we get to know our customers better. And so I think labor is going to get easier.
Yeah.
As labor has been a really painful, tough piece of this business over the last couple of years. I think the softening up of the economy is going to lend itself to us being able to maybe bring in some better employees and keeping them because they need to work.
Yep.
So, they're like you said, man, I think there's some things to look really forward in the industry. Do I think it's different? Sure. I think it's, before it was fool's gold almost, right? Everything was pretty and shiny and it was like a great, I think today it's down to like, we got to go back to what we normally have to do all the time. We have to work for it.
Yeah.
And if you're willing to work for it, it's a great business to be in. And if you're not, I would say get out. Or if the other thought is that if somebody's thinking that at some point they're getting up there in age and they need to get out of this business, I wouldn't wait another year or two but it's the reality. A couple of people have said to me, well, we'll wait till interest rates come down. It's not going to happen anytime soon.
No.
The bottom line is this: what we were living in before was not normal. Like what we're living in today might be more normal, more the norm, right? And so I think with more increases in interest rates projected, that's going to drive multiples down. So I do think that the people that are looking at in the near future of saying I want an exit, I would say sooner the better, because I don't think it gets better next year.
Yeah.
Because you look at it, but it may be a few years before things change. I think they've got to learn to live with what they're given and focus on the operations going forward if they're going to stay in this business.
How long do you think it's going to be before we start seeing? Well, I'm gonna call these like mega deals, right? How long before you think some of these big platforms start purchasing other big platforms?
So a lot of it's been in play, right?
Yeah.
Behind the scenes. And the reason you haven't seen a lot of them is because a lot of them have fallen apart.
Yeah.
So it has been, it's not been lack of effort. It's, as a lot of these groups have built these chains based on a certain multiple. And now you look at what Mr. is trading and these other exits, the pricing of these things, the math doesn't work anymore.
Yeah.
Now, with that said, I do think we'll see over the next year, we'll see, 2 or 3 mega deals because they just have to.
Yeah.
At the end of the day, there's going to be the need of economies of scale. And some of these groups will have no choice because some of the credit for some of these groups that may not be there, and they'll have to do something. The good news is there's plenty of dry powder out there to make things happen, but it is making the math work.
Yeah.
But it's not been lack of effort recently. I do think there's going to have to be some a little bit of period in between here, but I think over the next year we'll see at least a couple deals get done.
Interesting. That's when we're going to really see things start to, it's the proverbial snowball rolling down the hill, right? Like once you start to see some of that stuff happen, it'll be really fascinating to see how everything starts to move and shift and momentum build on that. Last question for you, Jeff. And this one is maybe easy, maybe difficult, but I'd like to ask everybody this one. What's the one thing that I can do today to be better tomorrow? And you can take this any way you want it. It can be car wash related. It can be, personal. Go buy yourself a great sweatshirt. Anything you want. So
at least me personally, I it's been a phenomenal few years, made a lot of money. I can tell you buying material possessions have probably given me less reward than I thought. And we've shipped, and as a company, as a firm, Amplify, and I'm helping driving it. We've seen a lot of people that need our help.
Yeah. And
I would say, as an industry, we've got a lot of folks that made a lot of money. I'd say, at least for me personally, it's focus on the giving side, and I've committed to 20% of my personal time starting next year. We've gotten behind Boys and Girls Club recently a lot because of their needs. The needs of the community is going up dramatically. We look at the food kitchens now. The demand they've got is a lot of pressure. St. Jude is another famous, great organization we got behind. So I can only tell you that we've been blessed as an industry. I'd love to see, I think, giving back as best as we can. Because at the end of the day, you can't take it with you. So I would say, I look in the mirror, but I do think it brings great rewards and satisfaction, well beyond anything you can buy for yourself.
Yeah, I love that. I love that idea because guess what? If you have not given back to an organization, and if you have not made any kind of considerable investment in something that is just for the greater good, you have no idea how rewarding it actually is for you. So there are selfish reasons to do it too, beyond the fact that it's the right thing to do, to give back and to help humanity, right? But it is super rewarding and super gratifying.
Yeah.
Jeff, we're going to have you on. It's almost like I feel like I should mark your predictions like on the calendar and say, okay, Jeff's coming back in 12 months and we're going to see what was right and what was wrong. But I'm looking forward to seeing what's going on in the industry here in the next 6 to 12 to 18 months. And we'll be sure to make sure that this was not your last appearance on this show.
Well, Matt, I appreciate it. And I look forward to it. I do think it's going to be a interesting ride. I actually just think everybody's got to look in the mirror and say, what we've gone through has been just exceptional. We've been blessed. We've had a good run of just really just fun times. I just think this is what we're going to head into is probably more normal. We got to do what we always done as car washers, and we've got to put our head down and go to work and do the right thing for our customers. And it's still a great business.
Excellent. Well, if you guys listening want to hear more great stories about how phenomenal this industry really is, make sure you're subscribed to get this podcast wherever you're listening to your podcast content. The easiest way for you to never miss an episode and never miss any of our great content is to download the Car Wash Magazine app in your app store of choice. Friends, until next time, there's just one thing that you have to do when you're out there focusing on that customer experience or maybe wearing your favorite hooded sweatshirt, and that is keep it clean.
Car Wash the Podcast is your source for real stories and real business insights from the experts, both in and out of the car wash industry. Our show helps investors, owners, operators, and managers think about ways to enhance their business. Our podcast is a free on-demand audio program that provides information on the latest trends impacting the industry, tips from successful industry leaders, and inspiration for our listeners.
Thank you so much for listening to episode 10, where we shared this rebroadcast of Jeff's interview with Matt DeWolf. Also wanted to let our listeners know that episode 11 will look back over 2022 and the car wash M&A market, and we'll feature some highlighted clips from our guests. And yikes, a lot's changed since the bright and shiny golden beginning of 22. So it should be interesting to look back and kind of see how the year has progressed on and some of the consistencies and some of the things that have changed from the feedback and the messaging from both our side and also from our guests. Be sure to look out for that. Thanks so much for joining us, and we look forward to seeing you next time. Bye.
Thank you for joining us on this episode of Car Wash M&A, the podcast, with your host, Lenice Barnett. Like what you hear? Subscribe to our podcast feed and leave us a review or follow us on social media at Amplify Car Wash Advisors. Want more M&A information? Visit our website at amplifywash.com and listen for new episodes on the last Thursday of each month.